Hey guys, Adam Rose, Vice President, Senior Loan Officer of Western Ohio Mortgage here in Sidney, Ohio. Today's another episode of the Mortgage Guy podcast, and we're going to talk about OFA. There's a lot of buzz around what's going on with it, and I announced some changes a couple of weeks ago about July 1st and what they were going to be doing. I might be a little bit late to the party because I'm releasing this after the 4th of July. So with that being said, I hope you all survived and you have all your digits. So let's talk about OFA. So the changes they're making, so effective July 1st, they were changing their down payment assistance program from, like, you could go up to 5%. Like, you had 2.5% assistance, 5% assistance, all this fun jazz. It's just streamlined, simplified. If you're going government lending, all right, USDA, VA, FHA, 3.5% assistance is available to you. If you're going conventional, 3% assistance is still available to you. Again, like I said, there's always some more costs involved. Sometimes there's origination charge on there. I always play it safe and say, hey, if you got 3.5% assistance, your net benefit's 2.5%. Again, everybody's a little bit different on how they work those. But what we're going to do is we're going to discuss some of the minor changes attached to the assistance and their straight program. So, it's crazy because we never, but a lot of lenders didn't do their straight program because the rates still weren't as good as the market. But probably over the last 12, 18 months, their rate has been a little bit better than market rate if you just do straight OFA. The main downsides with just doing the straight OFA is there's a little bit more documentation involved, right? You've got third year of tax returns and W-2s. You've got some different things going on, some income limitations that we got to pay attention to. The turn times take a little bit longer. So after I announce this and we talk about these rates, if you're already pre-approved with us or your lender, I would highly suggest calling back in. I just got off the phone with a client that we told that we should reconnect to see if they might go OFA, just to see if you can get a better rate. Because when you hear this stuff's crazy, all right? But I already know what's going to happen. OFA is going to be overloaded with loans, and their turn times are going to turn into 6 to 8 weeks again. At one point, it did go 6 weeks. And so you get into contract, you probably need to disclose that you're doing an OFA loan because we need to check their turn times. The turn times are going to constantly change based off their volume. So they might be 4 days right now, 5 days, and they're going to turn into 2 weeks in no time, and then it could turn into 6 weeks. And that's just the time OFA has the file. That's not your lender, right? Your lender, us, or whoever you're going with, we still got to do your application process, underwrite, get your appraisal. We still got to do all this stuff. Now, you don't need absolutely the whole file approved before you send it over. Like, you don't have to get it clear to close and then send it to OFA. You can do it in the middle of the process. But nonetheless, if they get real far behind, I mean, you're looking at maybe a 60-day contract, if not longer at this point. So should be interesting to see what happens. So let's dive in here. All right. So I want to talk about these income changes. So income limits do vary. So this example is just based off Franklin County, so Columbus area, right? So there are targeted and non-targeted areas, which is why they're able to get away with the rate disparity between the two, because of census tract data. They want to go target areas. That's what the whole purpose of this thing is. But you can still do it in non-targets. So effective July 1, 1 to 2 person family. Okay, again, they're just documenting the income of the individual on the loan, but family size does matter. 1 to 2 person family, $109,000 max income. Okay, can't go over that. 3 or more person family, $125,350. That's in a non-targeted area. There is a map on the website that kind of shows it. Actually, if you use, I think Fannie Mae Home Ready also has targeted, non-targeted areas, and I think it follows the exact same census tract data. So you can check that out too. Targeted area, 1 to 2 person family, $130,800. 3 or more people, $152,600. So they allow you to make some more money. Now let's say you're over the income limit for non-target. You're in a non-targeted area. You can still use their EDGE program. Okay, there is another program that they will allow you to do it. It's not better than the market. FYI. All right, market rate's better than that. So that's kind of the downside of this. Because it says on here, you can use first-time homebuyer EDGE program for down payment assistance at a higher rate if they are purchasing in a non-targeted area and their income is higher than the non-targeted area. But in order to still qualify, the income has to be under the target area limits. That's what's going to kick you into the Next Home program or the Edge program. So it's a different rate. So I want to talk about the rates real fast. Okay. So here's what all the buzz is about. All right. So when you get down payment assistance has a different rate attached. Okay. Justin's going to be scrolling down the APR, so I'm staying compliant. All right, because I am going to talk about rate a little bit. All right, so traditional first-time home buyers. This is the bond income eligible only. Okay, what that means is we are looking at FHA, VA, USDA, Govy loans on this. No down payment assistance. 5% is the rate. That's better than market by a point and some change. Okay, if you are Ohio hero, all right. Firefighter, police officer, nurses, doctors, you name it. Everybody in that category. 4.75. No assistance. That's crazy. That's crazy. So I highly suggest giving us a call. See if you guys can fit into this. Again, this is going to be the targeted, non-targeted stuff that we have to pay attention to. Income limitations and stuff like that to see if you qualify. But it's definitely worth a look. Now, if you are going, let's do that same scenario, but let's say you have to get assistance. It's actually pretty solid still. The 3.5% assistance for just a regular buyer, not Ohio Heroes, is 6.375. That's about market. 6 and 8, 6 and a quarter is about market right now without assistance. So, Justin, please run those APRs down at the bottom so I don't get arrested. And then let's go to the conventional side. So conventional, no assistance, 5.5% on the rate. Ohio Heroes, conventional, no assistance, 5.25%. And then with OFA assistance, it's higher, of course. It's 6 5/8 or something like that. Now, here's where I get a little agitated, and I know why they do it. I get it. It's for targeted areas. It's for low income census tract data and those places to kind of bring them up, get more buyers in that market. If you have to go the Edge program, the Next Home program, meaning you're not a first-time buyer, you're over the income limits, you're non-targeted areas, you mix all that stuff together, you still have the option to use OFA just like you do now. No OFA assistance, though. The straight purchase goes from a 5% rate for that first time, the ones we were just talking about, all the way up to 6.625. That's a big rate difference. It makes more sense for you to go market rate, 100%. Straight purchase. And then with OFA assistance, it goes up to 7 1/8, and conventional goes even higher, 7%, 7.5. So I mean, it's very neat. I think we'll be able to squeeze some people into that program, going straight USDA, straight FHA, straight VA, things like that, to just get a better rate than what the market might show. My big fear with it again is I think they're going to get so much volume that it's not even, people aren't even going to accept the contracts. That's my fear. Right? I love OFA. I think it's a great program in general. We always use it for the assistance, but I just don't know. I don't know how this is going to work out for everybody. I'm concerned. I don't know if they've ramped up staffing. I don't know what they've done to help accommodate for the increase in the volume that's about to happen with them. But I know when volumes weren't too crazy, not that long ago, they were almost 6 weeks. Yeah, it's going to be interesting. All right, and then maybe I misspoke on the 6 week. It was a little bit less than that, but it just feels like that. It's just craziness. Anyways, remember, guys, when you do OFA, also they have credit score requirements. Okay, when you're doing government lending, it's 640, FHA 650, and then there's different debt ratio requirements depending on what your credit score is. 45% is usually the highest on the back end they want you to go. If you are under a 680, over 680, you can go up to a 49.99% as long as you have an automated approval. Again, details that we'll worry about as your lender, but it's great information. I hope it's very helpful. If you are pre-approved and you want to give us a call back and let's reevaluate to see if OFA, straight OFA is a better option for you. The cash to close might be a touch bit higher if you're not getting assistance just because of how the program is set up. But it might be worth your time. That's all I got for you this week, guys. I hope that information was great and helpful for you guys. I hope that helps you with your home buying process and while you're out there shopping. Remember, call us. We'll get you pre-approved. If you're working with a lender already, make sure you call them and double-check your qualifications for straight OFA purchase. Guys, please subscribe on YouTube. Check us out. Share the video if you think someone could benefit from this video and some of this information involved. And make sure you subscribe on Apple Podcasts and Spotify. Let's get those viewership looks up a little bit, and that would be great. I really appreciate it. Other than that, guys, I hope everybody had a great 4th of July holiday, and we'll catch you all next week.